Next, the second example is still a low market. If you have any trading topics you'd like to discuss, just press 2 inches, comment, I'll clear things up for you. First of all, we check first that it is a real low market, which in this place is definitely true. The price is above 200 EMA, which is enough. At this point, the price came up first, then it went up. After that, it went up again, and then went up again to make a higher high. In this area, we can mark 2 positions. One is in this area, and the other position is far away. Therefore, the next step, we will wait for it to cause a fall breakout from any position with a red candle. Wait a minute, 15 minutes have passed. The price will make the fall breakout and break through both types. Therefore, through the gain, we will mark the position to come out as the same zone. This zone will be drawn from the close point to the low point, which is around here. When the zone is large, we have to be careful that the price will not break through the zone. If the price breaks through the zone in the downtrend, if it turns out to be a drop, we will not enter the trade. And as before, don't forget to mark the TP position at the swing high of this graph, which in this place is around this high line. Considered to be far enough, it can be used. Change the time frame from 15 minutes to 1 minute. TP just now is in this area. After that, we will wait for the price to close in the upper zone. Wait for just 1 minute. The price will rise and close in the upper zone. Therefore, we can buy according to our gain because it is a big green candle. We buy in this area, mark the position. After that, we will set stop loss and take profit. Our stop loss is lower than swing low. In this example, swing low is very clear. Therefore, we get SL like this. TP is at the same TP that we set for 15 minutes. If you check RR with your eyes, it will be around 2 to 1, not 3 to 1 that we intended, but it's not too bad. After that, just wait. Wait for a long time until the price touches our TP. After touching, we get another profit. The third example. The price is still on the market. We have checked the gain. The price is above EMA 200. It is considered to pass the gain. This point, the price rises, goes down, and rises again. When it does higher high and does higher low, we can mark the position of the point that is the target. This line is the first target, but there is another target at the low point on the left-hand side. But I don't want to draw in this example, because the current price is far from this trend. If we wait for the price to fall, break out lower than this, there is very little chance that the price will go back. Therefore, we are at this line. Wait for the price to fall, break out with a red candle. 15 minutes later, the price really fell breakout, and it is a fall breakout that occurs only in the sky. Therefore, it is considered to pass the gain. After that, we will draw the zone. Use it at 1 minute time frame. And finally, we will draw the TP. Use it at swing high. In this example, there are 2 swing highs that are far from the zone. The first one is this line. It is TP.1. And the other one is far away as the second point. Both of these TP will have to be tested whether it passes the RR gain or not. If it is too close, we will cut it off. Done, we will change the time frame to a smaller time frame. This controller can use the time frame from 1 minute to 5 minutes. For example, I choose to use the 3-minute time frame. Let's see how much effect it will have. The first step, we will draw the TP first from the 15-minute time frame. After that, the first check gain, the price will have to close in the zone that we drew. In this example, after 3 minutes, the price will rise. The price is closed in the zone. And most importantly, it's a big green bar. Therefore, we can buy it at this yellow line. After that, we will set stop loss and take profit. Our stop loss will be under swing low at this point. When we get SL, we will see that. Our SL has a very large size. Therefore, when we check TP, we must be careful. Don't let the RR be too small. The first step is to check TP at the first point. At this point, the RR is too small, about 1 to 1. Therefore, it is not usable. I will cut it off. After that, check the second TP, which is far away. After checking, the RR will be around 2.5 to 1. Considered to pass the gain? Let me repeat again. If we check and the RR is not enough, we will skip this trade. But in this example, the RR is a good place. We can enter the trade and wait for the price to touch the TP. Wait for a long time. This trade waited for many hours. But in the end, the price touched our TP. We closed the trade and got full profit, RR 2.5 per 1. The last example for the market to rise. The fourth example, the price is above the EMA 200 line. Therefore, it is considered to pass the gain. The price went from high to low, until at some point it tried to go back. This area turned into a long two-barrel chain. Therefore, it is an important trend. We will wait for the fall breakout to occur in the opposite direction with the vertical trend. In this place, after 15 minutes, there was a fall breakout. And if you check the fall breakout, it is considered to pass the gain, because there is only a drop that falls. But because the drop is short, we will get a small zone. The smaller the zone, the more careful you have to be than the big zone, because the price may fall or go up. As before, next step, we will draw the TP at swing high, which is around here. When everything is ready, we change the time frame to 1 minute. The next example, the fifth example, will be a sell-side trade. First, we check the price first. The price will be below EMA 200, which is really below here. And when the price goes back to the lower high, we will get a resistance. The principle is that we will wait for the fall breakout to break through this resistance. When it breaks through, it must be a green color and paint only the inside. In this place, paint through the grain. It's a long green color and turn it back, close to the bottom of the line. As before, like the market, we will draw a zone. This zone will draw from the close point to the high point. Therefore, when we get the zone, we will keep it for use. In the time frame of 1 minute, next step, we will draw the TP. Our TP will go back to swing low instead. The first point is this line, and the second point is far away. These two lines can be used well because they are far from our zone. The last example for this clip is still a stock market. First, we check first that the price is below EMA 200. The left hand is a stock market, still above EMA 200. But when the price falls, it is considered to pass the gain. When the price goes down for a long time, there will be a turn back, leaving a resistance for us. This point can be used. We will wait for the fall breakout to rise. Wait for just 1 bar. The price will go down the resistance and then turn back to the bottom. Therefore, it is considered to pass the gain. After passing the gain, we will look for the zone, right? Our zone will be from the close point to the high point. That's this zone. And what we can't miss, we will draw TP at swing low. Our low point, this point is too close to the zone, it won't count. We will look for this low point to turn into our TP. After getting TP, we will zoom in at 1 minute time frame. TP can be used at a distance. First, let's check if the price is closed below the zone. Wait for just 1 minute. The price closed below the zone. Therefore, we can sell. It's a big red candle. After we sell, we will wait for the stop loss. Our stop loss will be at swing high, which in this area is also in the upper zone. We got a stop loss. It's big enough. After that, we will check the size of TP. According to the swing low position, look closely. RR is about 3 to 1. Therefore, it is considered to pass the gain. After passing the gain, we will wait for the price to go down until it hits TP. Wait for a long time. But in the end, the price is really TP. Get profit in the fall, like when you get profit in the rise. All of this is a time frame of 1 minute trade scalping. Mainly, we use 15 minutes time frame to find liquidity sweep first, the point where there is a liquidity sweep or fall breakout. It will have to be a red candle in the market to rise. When it falls, it will have to fall only for the candle. After that, we will buy when the price has increased. And the price will have a chance to go up for a long time. If it is a market to fall, everything will go back. The candle that falls when it has a fall breakout, it has to be a green candle. And finally, the small time frame that we use to trade can be used from 1 minute to 5 minutes. Most of the time, if it is this time frame, I will use the time frame of 1 minute to 3 minutes. And see you in the next clip with new content from robergoldtrader. If you have any trading topics you'd like to discuss, just press 2 inches. Comment, I'll clear things up for you.